Welcome back to my channel. So today's video we're going to do an analysis for what we're expecting to happen in the market for this week. I always give a shout out to my coach, so bear with me. Firstly, when I'm doing my top down analysis, I always look at two sections of the chart, right? I look at the right hand side and I look at the left hand side of the chart. The right hand side shows us the current flow of the market, while the left hand shows us the draw on liquidity. If you can take note of that for your guidance when you're doing your total analysis using ICT. Now, the second one I look for now is my PD array. I always carry my PD array with me wherever I go because it guides me a lot in my analysis. That's PD array, right? Which involves a breaker, mitigation, order block, order, rejection block, fair value gap. But in this fair value gap, I always put everything under the whole type of I put V and I put INV. I understand that. So I always put fair value gap N. I understand what I mean. That's the normal fair value gap. IFVG, implied fair value gap, volume fair value gap, inversion fair value gap, then liquidity void. Then I come here and I write external. This is what I write in my personal book, and I put old lows and old highs, equal lows and equal highs. You can see how straightforward ICT is, right? This is how straightforward ICT is for me actually, because I like things that involve rules. Old lows, and so I write this on a piece of paper. Then I come down to DXY. But firstly, I'll go check the news first to see what the news is showing me, because the news will enable me know the volatility in the market, if we're going to have high volatility this week or we're going to have low volume in the market. Now, this is our 1 month chart, right? And what do I have on a 1 month here? This high created a low here, which was our buy side, our sell side liquidity, which was created in our 1 month chart. Look at this section here, our 1 month chart, sell side liquidity. And what happened next? A buy side liquidity was being created on 1 month, right? Now, if I use my Fibonacci from the low to the high here, I'll realize what? What will I realize? I'll realize that I'm in my premium. So what do? I label what is in the discount for markets to continue in the momentum. I come here and I label this, my fair value gap, FVG, based on my PD array here. What do I have next again? I'm following my PD array list to check what I can find on my discount level, because my PD array is my guidance. What do I have here again? I have one 1 MN. This is how I do it for my personal analysis. I have my order block here, and I can also measure 50% of the order block, which means our main threshold. You can put everything in your labeling. This will guide you not to miss out on any of the analysis. Then below here, there's also fair value gap. You can also do a stretch here. You can also put a line here. You can see this, right? And label it on top breaker block 1 month. But don't forget it's on the premium level. But there are sometimes markets can be very crazy and market might react there. Breaker. Reduce the letter to 8, the smallest, right? But you can extend it higher than that and just put it, okay. Okay, put it here. Just to remind yourself that we have something here. Now, 1 month, I know I'm in my premium and market is reacting at the draw on liquidity around here. If you measure this 50% here of the order block, just to know where this sell is coming from, you will draw it down here, down. So it's coming from that order block here, but I have to go down to my 1 week to know where this sell is coming from. But normally this is an order block which signals to us as our draw on liquidity. Since a liquidity of an old high have been taken, the next draw on liquidity would have been this order block. Then you delete your Fibonacci. We are done with our 1 month chart. We had confirmed everything on this section here. Breaker block, fair value gap, and other block is all we have here. Then what do I go? I go down to my 1 week. I'm always with this my chart here. It helps me a lot, like a lot. Then what do I have here? This is using our DXY. I have an external range liquidity that was being taken out here as our buy side liquidity on 1 week. And what do I see here again? A sell side liquidity was also taken out here. When the market has shifted structure in a way, signaling for us to go more down, right? Sell side liquidity has been taken here below here. Can you see it? This week, this swing point was being violated, meaning there is tendency that market will come back into this what other block here, but we're looking at 50%. We're looking at 50% from this high to this low, or we take it from this high to this low, because here would have signaled to us as a form of mitigation block. Here would be a form of mitigation block. This would have been a form of mitigation block on 1 week time frame. Just know how to label. It will make your chart be very easy for you. Mitigation, right? This mitigation, we have breaker here, and we have an other block also around here. We have an other block around here. So I have two zones. I'm looking at mitigation here, and I also have our mean threshold. If I measure this other block from this high to this low, everything I'm using is based on ICT. Mean threshold. Now this is how I do my analysis, right? Mean threshold. What makes my charts more interesting nowadays is more of labeling. I label a lot, so it kind of helps me a lot. So this mean threshold is 50%, right? But if you draw it down to this level down here, to this high, from this high here, this is 50% up of this level. But let's see what will happen today and what will be created today. So I know that there's a shift on 1 week. Market has shifted on 1 week, right? So there's tendency that markets might do this, just come a little up here and pull down. There's tendency that markets might do this, come to this OOB or come to this mean threshold and still pull down, because we're in the premium of 1 week and 1 month, and 1 week has shifted structure. Now if I come down to my 1 day, I take my execution from 1 day because I swing trade, right? This make it more easier and straightforward for me. The closest swing point here that has been violated is around here, which is our buy side liquidity from 1 week, sell side liquidity from 1 week. And I have here an imbalance. There's an imbalance around here, making this also to be an OB from 1 day. OB from 1 day, because another block includes an imbalance, and this is the closest other block, this one here, which has an imbalance. Can you see that here? But normally the swing point is from here, because the closest swing point is around here, which will be our sell side liquidity here. Can you see it? Our sell side liquidity on 1 day, because the head did not create a swing point. But this is the closest OB I can see, which has an imbalance. But if you look at this environment also, let us keep looking. A swing point was not also created here. This is the closest OB I can see. But from 1 day, I can't see anything nice on 1 day chart. But I'm going to do something again. I'm going to compare it to other charts. This TVC chart. So I'm going to check another chart to see if something is a swing point here. Okay. You can see on the chart of capital.com, we have what? A swing point created here. You can see that, right? But none here. So I'll go back there and still look at this environment for markets to react in. But this is the closest OB I can see. Now on drawn liquidity from 1 week, I didn't even check the drawn liquidity. On drawn liquidity here, we have what here? We have an implied fair value gap here. This is a drawn liquidity, an implied fair value gap. an implied fair value gap. Where is my label? IFG of 1 week. An implied fair value gap is around there. You can also look for a main threshold. Then what do I see here? I'll keep looking down. What I'm looking for is a fair value gap. So around here is showing me draw on liquidity. I can label it as draw on liquidity also. Draw on liquidity 1 week. You can see that, right? And what am I looking for? On 1 day chart, the next fair value gap I have is here, 1 day FEG. That's the next fair value. That's also a draw on liquidity. We can put it as draw on liquidity. Draw on liquidity. You can see why ICT is very easy and very simple. Draw on liquidity. Fair value gap. And what do I have here? I have an OB here. Also draw on liquidity from 1 day chart. So I have potential area here. The blue line here is a breaker block from 1 month. If you dare violate it and move up, we can't see. Also, there is no potential any draw on liquidity around here. So the next draw on liquidity I have here, I'm expecting price to get to either this draw on liquidity on 1 week or 1 day here. Draw on liquidity on 1 day. 1 day, draw on liquidity on 1 day. 1 day chart. Then I can come down to, until markets get to this environment, I cannot see any draw on liquidity here for market to be reacting here. Even though I go down to 1 week to find something, here's an implied fair value gap. From here to here, measure my Fibonacci is an implied fair value gap. There's no reaction there either. Or 1 month, no reaction there. So what I'm going to do is I'm going to wait patiently for price to come down to any of these three lines. 1, 2, 3, 4, draw on liquidity. And the first one is our breaker from 1 month. If it's a breaker on 1 month, I'll be expecting a change of character on 1 week or 1 day to take out this high above. But if not, I'm expecting it to come down more into 50% below of the 1 month chart. So this is what I'm expecting market to get to. Then I will come down to 1 day, 1 hour, and wait for a shift in market structure. So for those that want to counter trade, I'm not going to take any any buy from here. I'll wait for it to get to this black line or this blue line or this fair value gap from 1 day. That means if it gets there and start buying on GBP USD, I'm going to be looking for sales. I'm going to be looking for sales on GBP USD. The same thing goes to also the draw on liquidity here also, right? And the closest draw on liquidity I can see around here that has not been fully mitigated is this line here. Oh, it has gotten to the level. It has gotten there. This is a draw on liquidity of 1 day chart. Market's acting very funny there. Can you see that? Market acting very funny. So we're going with GBP USD aligning with DXY. As for GJ, I've been holding this trade since last week. I think I entered this trade on when? On the 13th. That was on Thursday. So I've been holding this trade on GG and I'm expecting it to come down, give me a 1 to 7, taking out this whole equal lows here as liquidity, taking it out. So I want to see how it's going to move this week for me. And I'm also going to check in my forex.com for news on the chart to see what's going to happen this week, to know whether we're going to have high volatility in the market or not. I hope my videos are not so long for you, and I hope I'm making an impact. And thanks again to my coach. And don't forget, guys, to subscribe on my channel. Thank you so much. Thank you.